Joining us now with greater perspective on what's currently playing out on the market scene is Muhammed Wagley from Sasfin Wealth. Muhammed, thank you so much for your time this afternoon. Perhaps let's start with the geopolitical developments, how closely you're watching that, especially the talks between the US and Iran that concluded, but still set for even more negotiations next week. The last time I checked, oil holding on to gains, trading at around $71 a barrel.
Well, always a pleasure to be on, Ling. And yeah, to kick it off, I think the status quo pretty much remains as it was, in the past couple of weeks, just in relation to the US-Iran story. It's been a tough start to the year for Iran. There was a lot of sort of unrest, domestically, lots of news about protests and things like that. So I think the regime finds themselves in, quite a difficult position. And, the US goes into these talks with quite a bit of leverage. Now, it looks like the Iranians are willing to come to the table with quite a few concessions. But I think, relevant to the oil price for the time being, I think there's sort of, it's been priced in that there's been a little bit of a de-escalation. So we're seeing the oil price hang tight. If that looks like it's going to change, it computes that, we could see that sort of rocket. And that would be on the basis of, supply disruptions in the Strait of Hormuz, which is, fundamental to transporting the oil.
Do you expect prices to hold at that $70 level? I see now that it's up $72 a barrel.
Well, all things staying the same, right? If these talks go well, we may even see it sort of come down a little bit. But again, it's a very precarious situation and it could sort of change, immediately. There is about a week left of talks. And if the outcome is negative there, then yes, absolutely.
It'll be interesting to see how that filters through to fuel prices in particular, especially when we have a stronger rand. All right, let's move over to company news. Netflix surprising us, making a U-turn on its bid for Warner Brothers and making way for a Paramount takeover. Your analysis on that? I mean, just going through some commentary, Netflix management saying that, you know what, this was a nice to have at the right price, and now they're walking away because they're not willing to up their bid. And for Paramount, it does seem like a do or die kind of situation.
Yeah, look, so I would agree with that assertion. It was a nice to have and not a must have. But look, there's two ways, I think, of looking at this. If you were a Netflix shareholder, I think this would have been great news because this is a massive acquisition, right? Like the likelihood is that had this gone through, this acquisition would have served as a bit of an overhang on Netflix, at least for the next year or so. So I think from a shareholder perspective, you're quite happy that this didn't go through. And yeah, again, nice to have, not a must have. But then, from a consumer perspective, it's like it would have been great to have everything sort of on the same platform. Absolutely. There's some new sort of HBO shows that we'd have loved to have seen. It seems, if you were looking to watch the new Game of Thrones, you're gonna have to wait a little bit longer. But if you're a Netflix shareholder, you're probably ecstatic.
Yeah, and it seems like shareholders like that move. That share price up close to 7% as we speak. I'm sure it closed around that price overnight. Let's bring it back home. The precious metal players are in a sweet spot. We got numbers out from Valterra earlier this week. Headline earnings per share more than doubling. It seems like, it's the same case when looking at Northern Platinum's numbers, revenue up 60%, earnings surging as well. Prices aside, though, let's talk about how that company fared operationally. Eland online and also contributing to production now.
Yeah, no, look, absolutely. So look, the key story is the platinum price. But I think with reference to Valterra and Northam as well, they've been, operationally quite efficient. They've been looking at diversifying their energy usage. Essentially, they're spending a bit more on infrastructure. They're sort of investing in this success while they're in, as you say, this massive sweet spot.
Yeah.
But, you can't ignore the platinum price. That is absolutely what is driving, the movement that we're seeing here. Today, the platinum price was up about 5%. The last time I checked, they were around $2,400 an ounce, which is just absolutely incredible. You mentioned sort of in your comments earlier the dividend of, I think it was 7 Rand per share. It's just phenomenal. At the end of the day, there's a lot of momentum that we're seeing here. And, as long as that platinum price remains elevated, I think all these platinum miners are going to be happy.
Yeah, and it seems like CEO Paul Dunn thinks this will last for the medium to long term, saying this is not a cyclical rally that we are seeing. So hopefully they're in that sweet spot for quite some time, and perhaps that can start filtering through into the economy in terms of investments. Let's take a quick look at some corporate action out of Vukile, Mohammed. It's added another Spanish mall into its portfolio. Your analysis there, a lot of moves coming out from Vukile over the past few weeks or so. Let's talk about how some of the rotation within its portfolio aligns with its current strategy, with its push into that Iberian region.
That's it. Yeah, Spain and Portugal's been the name of the game for the past couple of years, probably a bit longer, and they've been incredibly savvy with it, buying properties and then selling them off sort of at huge profits. Now, this new one that they've bought through their sort of Castellana subsidiary is a massive shopping center in Madrid. I think it's about 90,000 square meters. To put that into perspective, that's about 2/3 the size of Santon City, in the heart of Madrid, the capital city. So if I remember correctly, they didn't have too much exposure for Madrid, so this is a bit of a landmark for them, to have sort of a shopping mall of note, in the capital city, is big for them. And it's just, further reinforcing their strategy to, acquire and diversify away from South Africa into the Iberian Peninsula, which is, yielded handsome returns already. And I think long term, that's sort of going to continue to be the case. I think this, in terms of property companies, is one of the standout ones that one can find on the JSE.
All right, let's hit pause on the conversation before we move on to your stock pick. Let's reflect on some counters that have found favor with your industry peers.
We like First Rand, but you would have seen today that Nedbank, had a very strong day. From a quality perspective, it's probably less of the quality banks. If you look at just ROE, it's around 15%. First Rand at about 20%, but it was up 8%. And that's just alluding to, this is the improving, call it, environment conditions for the consumer and improving experience for the bank.
We can possibly look forwards to having South Africa's investment grade being upgraded. And Reunert will definitely benefit from any capital investment into this country as that part of the business. And then the other two vectors of growth that I really think is pretty exciting for Reunert, specifically with the new CEO in place, is their defence sales or their defence arms, where revenue is doing very well.
All right, so Ntobeko and Rickers picking those counters on the back of what we saw coming out of the budget. First Rand, SA Inc. player, Reunert likely to benefit from that investment spend that we're likely the infrastructure investment spend that we're likely going to see. Mohammed, your thoughts around those counters?
Well, let's start with First Rand. I've got to say, I thought banking was quite attractive even before the budget, but then subsequent to that, immediately we're seeing quite a bit of love for the, whole space. I think Ntobeko mentioned, but, it's really a reflection of the improving sort of consumer optimism that we're seeing. I think while that remains the case, we'll see the sector move. And then in terms of Reunert, this is one that I like a lot as well. Similar to the banking rally, we're seeing that improving sentiment also help. You mentioned the sort of infrastructure spend, needless to say, that's going to be great. But Rick has touched on the defense side. I think that also makes the company very attractive. I think we got in around 60 odd and it's trading, close to 67. You see a bit of weakness there. I like Reunert a lot.
All right, let's get your pick. You like those counters, but they're not your stock pick. Where do you see value at the moment?
Well, I'm going to go for Visa, not very exciting, but it remains one of the great business models. Every time you swipe that card, these guys, take a bit of a cut there. And, as long as cashless or the move to cashless remains a trend, that's absolutely the case. These guys are incredibly well positioned. Another thing that's really worth considering is, their integration of stable coins into their network. Now, it's a bit unclear sort of as to the details of what the US administration actually wants to do with the stable coins. points, but we know they're going to be using them for something, and when that materializes, Visa is very well placed to benefit. I think the same would apply for MasterCard and American Express. This is my pick in the space. Also worth noting that they've lost about 10% over the past year. You don't have some of this in the portfolio. I do think it's a must-have.
All right, let's leave it there. Muhammad, thank you so much for your time and taking us through trade this afternoon. That was Muhammed Wagley from Sasfin Wealth.